All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Let's make sure my headphones are on. Make sure the sound is on. All right, we're good. Testing, testing. Sound is on. Good morning, all. The only reason I have to test the volume is because I use the AirPods for the computer and I also use it for my phone. And then it kind of goes back and forth and sometimes it disconnects, so I just turn off the Bluetooth on my phone until I'm done with the video. Either way, good morning. Let's go ahead and talk about it. June 14th, 2022. It's a Tuesday here in regards to the stock market. We are open in about 28 minutes. Futures are green. Dow is up 127%. Nasdaq up nearly 1%. S&P up 0.59%. Russell up 0.33%. 10-year yields are falling slightly. There is a gap to fill on the 10-year yields right around 3.160. We've been talking about gaps for a while. How about the dollar? Dollar's on fire. Dollar index, this is a little red in terms of the actual candle, but it's up 2.63% after yesterday's small dip towards the end of the session. The VIX, 33.27, that's down this morning. It is now testing the 20-day moving average on the hourly. Crude oil did just spike about a couple minutes ago. We are now near 123 a barrel currently. Up 1.84%. Gasoline at $4.10 a gallon. Gold futures down about 0.5%, even though futures are up. That's mostly the dollar. The fact that crude is up, even with the dollar being that spiking up higher, says a lot. 10-year yield bonds futures are up as well, 0.42%. Euro dollar 104.53. Forex people 134.47 for the dollar yen. That's up about 6 pips. Bitcoin last night had itself a wild ride. You could see we got as low as 20,775. We did bounce. I did put an alert right below that. We're at 22,115 on the future side. Ethereum down 1.88%, fairly little better, right above 1,200 on crypto as we check that. Let's go to some of the headlines and we'll go to, let's see. All right, let's go ahead and take a look at some headlines. PPI being the producer price index. PPI final demand for the month of May, month over month, 0.8% was the report. Estimate was 0.8%. That met expectations. PPI excluding food and energy, month over month, May, 0.5%. Estimate is 0.6%. PPI final demand year over year was 10.8% of the estimate of around 10.9%. And PPI year over year excluding food and energy, 8.3%. Estimated of 8.6%. So that's a meet on final demand month over month, a beat on core, a beat on final on year over year, and core on year over year. So again, some good news. You're going to get at least some kind of little reflex rally just for the simple reason that you're getting to oversold conditions. Let's go ahead and bring up an RSI chart so we can take a look at it. Let's go to studies. We'll go add study. We'll go to momentum studies. S, and we'll go to the RSI and see where we are. You can see just yesterday, I believe that was yesterday afternoon, hit oversold levels on S&P futures. We did bounce, so at least that shows it's not oversold. We're testing oversold on the daily. Let's go to Nasdaq and see where we are. Nasdaq testing oversold on the daily as well. On the hourly chart was oversold. That's moved. Let's take a look at Qs. Qs, same deal. Oversold right over here at 274. It's up about $3 currently. Taking a look at SPY. So again, a little oversold, but nothing crazy on the 1 hour. If we bring up the daily, we're close to oversold. That'll bounce with futures. QQQ, you can see near oversold, near a 33 reading. Let's go to IWM, 35 reading. So again, a lot of things are getting to the point of oversold in a couple of time frames, the hourly and the daily. Does that mean that once it hits oversold, it automatically gets bought? No, that's not the case. You usually get some reflex rallies, usually when you get some really big moves like yesterday. And, I guess we're kind of to the point now we're so used to, let me see here. Let me see, studies, edit studies, and remove this RSI. Sorry about that. Usually not a capitulation event, but a pretty bearish one when you get advanced decliners. It's talking about market breadth. Again, advanced decliners were 80% of the market yesterday. I think it was 80 to 85. Usually day after, you get a bit of a snapback rally. I think we do. 3,800 is still your pivot point on S&P futures. That's really what you're looking for. If you can kind of sustain a rally above 85.03, then you can start talking about getting into a gap fill right around 38.97 on ES. That'll be good for about 90 points. I think we could get there. We do have 38.28 as the 50-day on the hourly. Again, that might give us short-term resistance. But again, you need to break 38. 38.03, let's just call it. That was the peak overnight. So again, we're starting to base a little bit. Let's see if we could stay above 37.50. If we do, then again, 3,800 would be in focus with a break of 38.28. I would say a break of 38.10 if you wanted to. You could target 38.97 for about 87 handles. You could do SPY with that, but you need to make sure that you get out today because you do have retail sales tomorrow and FOMC tomorrow. The FOMC tomorrow is at 2:30. We don't know any announcements in regards to the Fed. The talk is that they're going to raise 75 basis points. That was confirmed yesterday by multiple news sources in terms of what they see. Nothing has been announced yet with the Fed, whether it's 50, 75, or 100. Again, I think 75 is fine if we can do that. That shows that they're really going for inflation, but we don't know where we're going to get. In terms of SPY, again, get above 38, 380.10. Let's call it 38, 380.20. Or we'll give it a quarter, 380.25. If we can get above that, then we do have a gap to fill right here at 389.76. I would target possibly the 390s. Get out of it today and move on with your life. Because tomorrow we're going to have some fireworks, obviously, with the Federal Reserve Open Market Committee, with the rates, and of course, retail sales. In terms of anything else in the market that's moving, FedEx did report that they're going to increase their dividend. Let's see the exact number. FedEx announces to enhance stockholder value and updates the board governance, increases quarterly dividend by more than 50% to $1.15. The estimate was 87 cents. If we go and bring up the heat map this morning, let's go and bring up FedEx. FedEx is up pre-market 8.47%. And you can see here a lot of green on the board. Again, tech, you have energy leading, you have cyclicals leading. Usually when you get a little bit of a bounce in terms of risk on assets, you're going to get a push in cyclicals or discretionary, and of course tech. So tech had a nice close yesterday. It wasn't terrible. Again, nice little fall in terms of the 10-year yield and the dollar. Not enough, obviously, because we're at 33.35 on 10-year yield, 3.395 or 3.335. But again, I wouldn't be too surprised if we get that break of 38.10. So here are the scenarios I have. If we don't break above and fill this gap today, I think we fill it tomorrow, where everyone's bearish on FOMC. We'll get some kind of turnaround, and we'll get to at least 3,900 on the S&P. After that, you could short it, if anything, if the data or any kind of news comes out, sure. But I still think that we fill this gap right here to 38.98. The sooner we do it, the better, because then I could short it. In terms of Bitcoin, we have some gaps to fill to the upside. In terms of Nasdaq, we have some gaps to fill upside, right around 11,833. I think with future side, I'd rather go with Nasdaq than I'd rather do the S&P. In terms of trading the option, I think I like SPY a little more, just to kind of keep it compressed. I want to get out of it today. This is why I closed my Apple puts yesterday. This is why I closed the SPY puts, even though they expired anyways. But I wanted to make sure to get away from any kind of ignition of a short squeeze or a possible short covering or a snapback rally while I'm short. Good morning. Ian is asking, do you think a 400-point hike is on the table? I would love that if that's the case. Again, the faster they go, the faster they rip off the bandage. I don't think they'll do 100. I'm leaning, I was around 25%. They'll do 75. Now I'm leaning definitely towards around 75%. So I think the 75 basis point hike is kind of baked in now. You can see the market's kind of bouncing on that. So again, we'll see what they announce. If they say 50, we're going to fall, I think, because then the market would be disappointed. 100, then it would show a little bit of a panic where that actually the inflation data is getting away from the Fed. So I don't think they'll do 100. I think they do 75. So if they do 75 drawdown, what if they try and get ahead and do 100? Austin says. I think 100 is fine. Again, rip off the bandage. Think of it as a poison pill, where it's going to cure you, but it's going to really have a lot of side effects. That's exactly what the rate hikes are going to be. So again, think of it as a patient going through experimental surgery or experimental therapy. You know, you have to weigh the risk and reward, right? For the Fed, they're kind of in a box. Remember when Federal Reserve Chair Powell said, hey, we're not doing 75, that's off the table. I don't know why he even said that, but he did. So again, if we don't get 75 and we get 100, that's credibility gone, possibly. Or he could say, hey, we're looking at the data, facts change, things change, which is a little more normal. The market is very unforgiving to Federal Reserve chairman or chairwomen, as we know. I don't know any Fed chair that is actually beloved by anybody. So again, they're going to be the most hated people in America for the business community. But with that being said, I don't think we have a 100-point rate hike coming. I think we have 75. If we did 100, then you start looking at in terms of how the market will react. Will they cheer a more hawkish Fed, or will they say, oh boy, they are panicking? That's really the case. The news is not absolute. The news, we don't know if it's good or bad. The news is all about reaction. Let's see. Tesla is asking about its Bitcoin holdings. I know I missed a question there. I think Tesla does continue to go down, just not today. I think obviously when it rolls with the market, you'll probably get to around $600. 501.19 is a pretty good target. The only thing is that now I'm seeing that SpaceX is trying to raise some cash. I don't like this stock split at all. I think the stock split is kind of reeking of desperation. That hey, we got to raise some shareholder equity, even though I thought the books were bounced. A part of me just feels that this is part of the Elon Musk Twitter saga, and I'd rather not touch the name. There is a gap to fill at 418. You could definitely get there if things get really ugly. Tesla is, again, a consumer discretionary. Yes, they sell a lot of EVs. Yes, they have a better balance sheet. But again, it is still expensive. You better show some growth if you're going to pay 40 plus PE on forward earnings. What do you think about Carvana at this price? Well, we know that used cars are having issues of getting off the lot. We know used car prices are going down. So until used car demand goes higher, I would not touch Carvana here. Again, I sold my old car to Carvana, so they're a really great company in terms of customer service. But in terms of the stock, I wouldn't want to be the first one in there to try to test the waters and try to catch a falling knife. If you start seeing a turnaround in terms of the consumer or a consumer sentiment where people are buying stuff again, then Carvana will be bouncing back. But that's probably one of being the last ones to really sustain a bounce, in my opinion. Granted, it is part of lumped in the high-yielding, high-beta names. So Carvana may get some love today if we get futures the way it holds now. But at the end of the day, I would not be a buyer of Carvana here. I think you kind of want to be a little more defensive with your name, with your purchasing of any kind of stock. You want to make sure at least the multiples are a little cheaper, and Carvana is just too expensive. Good morning. With the round of first T-bills and notes maturation tomorrow, do you think bonds get bid looking at TLT? In regards to the maturity, I think the Fed is more important here. You could see a nice reversal here on TLT in terms of the bond prices. Again, we know how important bond prices are, guys. Bonds need to be bid in order for stocks to get a sustained rally. Can't have the bond market move this much. And again, guys, the bond market being so volatile is very unprecedented. You don't see this very often. It shows an imbalance of buyers and sellers, and you also see an imbalance in terms of perception. Again, short-term rates, 2-year yields, inverting of the 10. Again, that's big news. Again, you can't have this kind of volatility in the bond market and expect any kind of sustainable or meaningful bounce. Bonds have to stabilize in order for us to consider a bottom. We are not there yet, but are we getting closer? Let's see what the Fed says. Did you buy SHOP pre-split or after split? Did not buy SHOP at all. Again, I don't mind that they do a stock split, but again, their PE ratios are high. They're not going to get any kind of buyers unless you start getting a rotation into high betas, which we know doesn't last very long, usually about a day or so. Shopify right now, a PE ratio of 252. No one's going to pay that in this environment, especially when yields are higher. When I can get a 3.3 yield, at least confirmed on a 2-year, again, that's guaranteed. We don't know what this drawdown will be for SHOP. So again, with that kind of triple-digit PE ratios, they're not going to get the love. They're not going to get the inflows right away. So again, I'm not against buying Shopify at all if you love the company. But temper your expectations. For those kind of high betas, I would rather do a DCA, which is dollar cost averaging over time, instead of putting one lump sum into one position. Let's see. John is asking about Apple. Let's see. Thoughts on adding shares at Apple this level? Well, Apple is my largest position. Obviously, they have a gap to fill the upside. Talk about a great setup. I like Apple here. We did trade Apple yesterday. I think Apple could definitely get to around 130. Where would I want it to be where it gets interesting, where I really want to buy some? Right here, 120. That's pretty much the level I want to go by. Could you get to 97, sub 100? Absolutely. If things get really bad and Apple has to bring down their EPS forecast, oh yeah, you better believe it. So far, Apple is holding up, guys, right near the 161.8 extension. That's around 129. We're kind of holding that. If you break, you're going to get to 120. But 129 is your massive support or short-term support. How will I play the Google split? I own shares. I do love Google. 1791 is the 200-day. Could it get there? No, probably. But again, 2000, I think that I want to pull the trigger at 2000 to go ahead and buy some more Google. How's that dollar looking, especially against the yen? Yeah, let's take a look at the dollar yen together. Oh, shoot. Dollar yen currently is boosting, as we know, on the weekly. Take a look at the hourly. Kind of flagging here, kind of staying here. Again, I think we get a little higher. Unfortunately for equity bulls, we need a cheaper dollar. And just like yields. Let's see if we can get back to this head and shoulder of 104.62. And then we can start pulling down. But again, in terms of looking back at the dollar, 105 is that pretty big resistance. Actually, no, I'm sorry. Big resistance right around 108. So we're not quite there yet. There is a 161.8 extension for my Fibonacci people at 114. The dollar can go higher, but just please reject 105 if you're a bull. Did you buy more ETH and BTC? They did the peak overnight. No, well, I buy every week with dollar cost averaging. Have I bought more? No, because I didn't hit my alert, which is right around 19,000 on Bitcoin. Bitcoin wasn't there. I don't know if Ethereum broke 1,000. Did it? Barely, 1075, almost, but no, we didn't get there. This is on futures anyways. Does Amazon go below 100? Absolutely, definitely can. Why not? Remember, this is post-split. Sounded terrible, right, from before. You're more likely just going to give back all of the 2020 gains of the pandemic. You'll probably get back to the pre-pandemic levels from, let's see if I can bring this up here. A lot easier. So 100 would get us back to the 2019 peak split adjusted. That could be definitely a floor, but really the other floor I have here would be 80. 80, I would definitely want to go ahead and buy some Amazon. The PE multiple would be down. It wouldn't be too expensive. TQQ I'm still holding. Thankfully, it is not an options trade. I will definitely add around 1823. So again, when it comes to leverage products, you better have at least a good time frame that you want to have in mind. So I do expect a turnaround there. Levels to buy Disney. Let's take a look. Back to Disney, you could see nice support there around 96. So I'm going to bring up the yearly. And you got the low here, pandemic lows. No, let me go ahead and split that up here. Here we go. Pandemic lows around 79.07. I don't think we get there. We could, but Disney right now in terms of PE multiple, let me make sure and see. Right now, if I can go and bring up the forward PE, Disney's trading at 17. Yeah, it has a little more to go. Yep. You could start getting below 90. Yes, I don't think we get below 80, but 90, definitely. Unless Disney shows more profitability and moves that PE multiple a little more down. So again, I mean, it's a little more earnings. So again, let's see what earnings have to bring. The next quarter is going to be extremely important because it's all going to be about valuations. If the market sees EPS drops, forecast drops, those kind of numbers are going to reflect, and you're going to get more downside because the PE multiple, if you're looking for that sweet spot, 16 to 17 times isn't bad. Again, if you're not pricing in a recession. If you're pricing in a recession, you start getting to 13 times. And that would possibly be fair value. Do you expect a run-up before FOMC? I do. I do expect a little bit of a run-up ahead of FOMC. I think today would be calls if you break 3,800 on S&P. 3803, 3805. I would want to play that gap fill, 3897, and go from there. So that's my focus today. I'm watching bonds as always. I'm watching the dollar, the macro, oil. But again, 3,800 if you're a trader. You're watching 380 SPY to target 389 SPY or 390 SPY. We can get a possible $9 move today on SPY. I don't think that's out of the question. Again, especially ahead of FOMC, a better than expected PPI number. not much in terms of news today. In terms of, I guess, monetary policy news, we have the PPI that was done, and that's it. Tomorrow we have core retail sales at 8:30 and FOMC tomorrow. So what you want to do is make sure you trade for today, get the hell out, maybe leave one contract running, see what the FOMC or retail sales does, and go from there. You want to be as tactical as possible. You want to be as patient as possible. You don't want to go all in on anything. Be careful. Again, 3,800 is what we're looking for. What caused the market to tank yesterday? Again, pure liquidation in crypto with that thing with, I believe there was a broker called Celsius. They were having issues. Binance was locking up everything in terms of withdrawals. Again, that adds fear. And again, what are they going to do? They're going to try to liquidate to get some cash. Same thing with stocks. That CPI number was that bad. PPI, okay, showing a little better. Even the slightest bit of good news is going to show at least some kind of upside reflex rally. They're not going to be short forever. You're going to get some up and down moves. Again, like I said, 3,900. But the big move yesterday was caused by bond rates. Bond rates was the key. Bond markets getting smoked, the dollar being up, and of course Bitcoin being liquidated from that Celsius network, and then the withdrawals. Again, that big flush. Talking about a 25% drop in Ethereum. That's big. Even in crypto land, that's pretty big. So a lot of stuff happening in crypto land. SEC investigation. They were talking about all those yields. I had this question before. Hey, would you invest in this crypto? It pays 40% dividend or 40% yield. Those are not going to work, guys. Those are dividend traps. It's not sustainable to pay that. So again, that's why with crypto, the majority of my holdings, honestly, is Ethereum and crypto. Sure, I have some other coins, but they're not that big of a holding. The other one being the biggest one was Graph and GRT, and the one that didn't work out, obviously, but I didn't have much in it, was the one that fell, or the one Terra Luna. So I put 1,000 in there, and that's gone, basically. So it happens. It happens. Again, that was my position. All right, guys, we'll go ahead and leave it there. Have a great rest of your morning. We'll catch you guys tomorrow for the later afternoon for the aftermarket recap. Have a great rest of your day. Watch that 3,800 level. Let's make it a great trading day. We'll see you guys later. Cheers.